Alright, hello guys, I'm glad to have you on board again today. You know what time it is, so let's jump in. As of last week, we've had the FOMC meeting. Quick TLDR on what's been said last week. I decided to trigger some profit taking due to some combination of factors. Naming them, we were accelerating above the resistant context prior of a catalyst, the FOMC meeting, with lots of uncertainty on whether we're going to get or not get a 25 basis point. But on top of it, there was really one additional factor that really was the most decision-making one to me. That was that some of my contracts were going to expire anyway. So the question was, am I going to roll them over to the next expiration or not? And I decided therefore not to do such a thing and to trigger early profit taking before the event. So now these expirations have been triggered, the event has passed, and as we can see, it has been pushing prices even higher. So was it a good decision, bad decision? Well, to me, I just said this was a rational decision to make at that time. And remember, I still have some trades in the market because I had taken some further expirations and these are still in the market. So the current stance I'm in is that, just like I said back then, I will carefully look at the aftermath of the FOMC meeting, whether being back then pushing back to support or doing it later. The question is, until I get to reverse the context, I am still going to be cautiously optimistic. The other thing that I would like to mention is that if we have a look at a low risk strategy, remember this is 3 time frames above, so our flow trade is in H1 time frame. We're looking at it through the trend channel by looking at H4, so we get a more broader picture of the pattern. But the low risk strategy is the weekly, and the TLDR in here, same story, when everybody was like, oh, we're all going to die, bear market, explosion, whatever, aftermath of COVID, we're all going to die. Well, I told you, no, there was a bullish trend on many other time frames, including higher ones. We've reversed the context, so bear that one in mind. We're going to go to the third range boundary first, and then we'll see what the hell goes on. Either we do reject that area, and I would start to be eventually a bit more cautious or even bearish in the outlook, but for now, that is, we're going to have to get there first, and then we'll see whatever happens there. Though we are getting into this area. So this is not an appropriate time to me to be overly bearish now, but that doesn't mean you know what's going to happen out of this. Remember, there are bullish trends, background trends that support the prices. So we're back into the first truly resistant area. And the question is, what's going to happen there? All right. So what you take out of this for your flow trade is to say that now we're no longer in a bullish low risk area. We're in a bearish low risk area, though this is an area in which if we do get some weekly signals, we could eventually see some prices going down. So the way we are is that we still trade according to the low risk strategy. Remember, weekly charts are bullish trends. The context we're above the rising moving averages and the like. Okay, so you rather like to be buying rather than selling, but still we're in an area in which it's not rational enough to buy. So what I'm saying in here is that in a bearish, speculative area, you never buy, okay? So I'll only take some profits there. I'm not going to buy into this area, all right? But you also know that we have a third flow to trade. Remember, the pattern has 2 sets of consecutive flow, and the third one is in here. Normally, the flows play by 3 sets of flow. So there would still be another flow to come. And this one, remember, should be coming along the way with the Bollinger Bands. So normally, give it a second to plot. All right, these Bollinger Bands in here, okay, should narrow over time, and there should be the trigger entry for the third and final flow. Remember that, all right? So I'm still not bearish either. That's also the reason why I kept some trades open back then. All right, until then, what matters to me is to let you understand that as long as this context, the H1 context, hasn't been reversed, I am still bullish. If we were to reverse it, and that's what we said last week, remember that I'm personally carefully looking at every end of bearish cycles. When the bears have their time to play, when the cycle in here is in the bottom, this is where I pay attention to prices. The area that I would like to trade up on are either inside or below the context, because this flow has been pretty mature now. There are reasons to believe it will probably reverse, okay? But to reverse, it will go below the context and we'll have to go for the third range boundary after. So the target for my trade is to put back the money that I took away in order to play the final move and take the profits on the third range boundary. All right, that was the plan. I hope you've got that one already. All right, so the first bearish consolidation cycle hasn't gone as anywhere interesting to me, so I'm currently just letting this thing consolidate. And it can go higher, I see no problem with that. Anytime we do make a higher high, the story repeats itself over and over again. All right, so this is what it is for now on the S&P 500, letting it ride, but not with a stupid bullish bias, but just to say, well, being overbought and being in extreme greed territory on the sentiment is nowhere to be found in this strategy. I've never mentioned that. It doesn't matter, all right? So let the price do what they do. In flow trading, we don't pay attention to sentiment. We don't pay attention to anything else, all right? So for now, technicals are still supportive for the price, so let it be, all right? You don't risk anything. All your trades should be at break even. They'll be far beyond confirmations and stuff like that. So right now it's a guaranteed profit. The question is just, do you really want to rush your way out? Well, you don't have to do this, all right? There are no reasons to do. All right, aside from this, when we look at cryptocurrencies, very interesting stuff in here. Remember, the flow trades are in the 4-hour charts in here for the Bitcoin, and same for Ethereum and the like. Some of my flow trades have been stopped, like Atoms and Chainlink. No, not Chainlink, Theta. Chainlink has gone pretty close to it. Remember, to me, it's really the way it was. In terms of Atom, that was the same story. I had some stop losses set in here. They've been triggered, and that's the way it goes. I mean, sometimes things don't go as planned, but that's really the way it is to me. I thought we would have the beginning of the second flow in here. The second flow failed to trigger, and instead got further stop loss. Well, this was a 50-50 chance. Go for this. The thing is that still, I'll make more gains in the end by trading this flow strategy. Though we'll see if that was an odd event, and if Atom is just going to recover and break now the second flow, or is it just a problem? Remember, the second flow just doesn't have to break the previous low point. So we could break this one, because I've taken the risks of putting my stop losses back there. And that was a mistake. Eventually, I should still eventually be in that trade. It's just that I have limited profit takings, and that's the way it goes. So Atom, stop losses have been taking. Same thing for Theta, who's been making new lows. So that's a different story for this. The other ones I said were still pending, and it isn't because I was stopped on Atom and Theta that I was changing the game for the other trades. They are all separated trades to me. And I'll let their risk limitations play their game. Stop loss is taken, well, that's too bad, but I'm moving to the next trade. For Bitcoin, it wasn't the case. Remember, I took some very late trading here. Same story, I bought the end of the cycle and stuff like that. I took another trade right here at 25K the other day, and the question now is, what do I do then? Because I told you that I would get to make a decision, and I will have to make a decision whenever we'll reach out to the third range boundary, because like I said as well, we're gonna have to get there whether you like it or not. And some people were like, yeah, Phil, stop saying bullshit, actually prices are going down, we are going to crash. Same story, okay? You're inventing patterns. I do have the ones that I trade for years. I know they're profitable, and therefore I don't give a fuck about what people say. The truth is, well, now here we are, and that still means I have said in advance that this area will matter to me. So you should ask yourselves, what the heck am I doing here? Am I buying? Am I selling? No, of course, in here is not an area to buy to me. It's an area to eventually start triggering some profits. And just like I said back then, before it even happens, it will mostly depend on the signals. So I have absolutely no signals here. We are inside the resistant context. Remember that if I want to have a bearish third range boundary and therefore trade inside the context, I want to have trending signal. But to be honest, I don't have any now. We're overloaded, which is more than overbought. There are early signs of taking profits which haven't been played too much. Remember, the take profits have been happening in here, though we've gone through taking profits, which means no one is actually selling, and we're getting into the more interesting area. Though we're looking for sellers now in Bitcoin. Question is, are we going to find them or not? I don't have the answer. All I would say in here is that I don't see any reason to me to rush to the exit door. But the truth is, I have a pretty bad trade. I mean, remember, this one is pretty poorly positioned. And I took another one on top of it. So as I have double trades in the same consolidation, I decided to take the profits of this one. All right, so that's a nice gain. Remember back then I was underwater and taking some losses, and people said, yeah, you're going to be stopped all over the place. Crypto is fucked. You're all going to die, blah, blah, blah. So here we are. I'm taking this nice gain. It's always good to take. And I have this one now, which is set at break even. Okay, so we're at the third range boundary. I don't want to know what's going to happen out there. I'm not going to pay too much attention. I get out of this trade, so I'm going to be more safer, in a safer position now. And I have this one which stop is at break even, which means now two things are going to happen. Either we reverse out of this, and remember, if it's a bearish third range boundary, then we're probably going to go lower. You also know the sequence. This would have been the second flow, and the third flow is going to be paid out of the Bollinger Band. So whenever we get to touch the Bollinger Band, I'll be there to buy again. All right. So if I get stopped on this trade, that's only going to be triggering another trade. All right. On the opposite hand, you also know that the second flow only terminates when we have a third range boundary. All right. So we have that area. Now, if we get to fuck it all away, and meaning that we need to break the third range boundary area without ever touching the trend channel, and we got to make new highs. Okay, so if we do this, it doesn't have to be a dildo like that. I mean, we can just do it like that. Okay, slowly but steadily grinding our way higher into as long as, and all I need is for us to go make a new high, okay, and trade above the higher time frames context. Remember that. This is all in the fucking PDF, in the fucking Prezi, okay? To squeeze a third range boundary, I want to see the prices trading above the high time frame context and so on. So in order to squeeze that third range boundary, we have to get there at least 32.5K, all right? Because these are the sets of rules that I follow. That doesn't mean, well, they're perfect. But like I've always said, what matters and what makes the difference between those who make money and those who won't in a long term in the market are those who have a rational strategy that works and who are able to apply it repeatedly without changing the game and changing the rules. This is the cheat sheet of trading. All right, though you can see some people making millions or tremendous fortunes in the social medias, you will always see the winners in social medias. Most of the time they're lying or changing the games or hiding their losses. We all know that. But the thing is that we'll still believe it, all right? Everybody's making money but you and stuff like that. Well, all right. Let's make it straightforward, okay? Just try to apply a strategy, guys. That's really the only way out, all right? So that was the lesson today. When it comes to Ethereum, pretty much the similar case, but the prices are different. Remember, in here, that was the same story to me. Slightly different in the sense that Ethereum could have triggered a delayed third range boundary in here. But remember, delayed third range boundaries still have to be tested again, all right? So I definitely think Ethereum is going to have to go there. But the thing is that Ethereum has much more chances to break out of it because the third range boundary has already been done, all right? So to me, that's an area in which either we actually reject, just like Bitcoin and same story, the third flow will be on the Bollinger Band, or option number two, this one reaccelerates. Remember that the fundamentals are severely much more in favor of Ethereum than they will ever be for Bitcoin until Bitcoin gets to the next halving, which is still several weeks away from now. But the reality is, well, Ethereum has much more layer 2s and stuff like that. So remember that the activity is on Ethereum. Bitcoin is a nothing use case, and we definitely wanted to keep it that way. Sure, there's been the ordinals and stuff like that, but pay that one real attention. We do have, and this is not just diving into irrational stuff, we do have volatility alerts on Ethereum, which we don't on Bitcoin. So if there's one thing I can tell you is that Ethereum is either going to go there, same story, both of them will reject, and they both will go back to the Bollinger Band. That will be less of a drawdown for Ethereum, which will be 17% down, when on the other hand for Bitcoin, going back down to the Bollinger Band, give it a second to plot, would be a 25% drawdown, 26% drawdown. So same story, if you really have a bearish bias, you think we're all going to go down and stuff like that. Yeah, sure we can, but that's going to be hell of a lot more bearish ride for Bitcoin if that were to be the case. On the opposite hand, if Ethereum goes for the opposite Bollinger Band, that's the $2,000 mark. And to be honest, if it breaks above this third range boundary, Bitcoin will do the same. Like we've seen, Bitcoin will go for 32K. That's the area in which we're supposed to be. Well, Ethereum, we're going to have to do the same, but for 2.3K. And same story in here, there are much more gains to be made on Ethereum. That's still the same old story. That's the nature of the beast. Ethereum does always make more profits than Bitcoin when we are in a bull cycle. If this is what we're in, then like I said, this would be just nothing but another trap, extendedly to say, well, all the supposedly good buying entries were in here, in this trend channel bottom, and yet we would just have made another stuff around this SEC trying to break stuff and stuff like that. Just yet another bearish catalyst, just like we had the banking system back then. And we would just go there to trigger the next wave of bullishness. So to be honest, I don't have the answer. All I know is that I've said it very clearly, this crypto market is under huge manipulation of the crypto cabal. Maybe that's the only reason that I've taken my profits off the table for Atoms, or taken my losses and my stop losses on some trades like Atoms, the weakest ones, and theta's. But on the other hand, it's still holding on so well so far on Ethereum and Bitcoin. And I definitely think this strategy is far from being over. So it's time to reduce eventually the risks, but I am still confident that crypto has been severely hammered by external unpredictable factor, aka some people just manipulating the market, to be honest. And I still have the same outcome for me. They will fail on that journey of trying to put it down, and failing to kick someone out the table is just making it stronger. So that's always been my thesis. It's a bit off the regular stuff. I generally tend to tell you, don't overthink things when you're in flow trades. I don't have the answer. Like really in trading application context, either we're gonna go to the Bollinger Band or we're just gonna fuck it all up. All I would say is that, to be honest, fucking it all up would make hell a lot of sense. That would just be taking a 180 degree out of the recent attacks from the SEC and saying, well, if we've seen the worst of it, that will be the confirmation of the bull market. Why is that? Well, because with this time around, if this squeezing third range boundary stuff happens, that overlaps with what I told you earlier this week in the bigger time frames context. Is to say, if we get to cross over these moving averages, that's going to be the sign that the bear market is over. And like I've always said, I've already put my balls on the table by saying this bottom is already in, and I don't see any reason the bear market overextends. We'll see all about that, of course, in the weekly updates. See you guys next week. Bye-bye.